As a business owner, one of the main reasons I make videos each day is to show people how to make more money and how to save more money, right? Obviously, I report on the daily news, but the main focus of this channel is to show you how to make more cash and how to stay safe, right? Because if you don't have the safety, you're not going to make the cash, period. So this article that I came across, I'm just going to go through it. It might have some validity. I've checked around a lot. I've researched. I haven't seen much credible information to back up this article. But when I read this, obviously it's rather alarming. Gig workers to get hit with big tax surprise next year. Like, oh my God, more taxes. What's going to happen? Let me check into this. So the first part of the article I'm going to absolutely skip because it's just about a musician, which really doesn't concern this industry of drivers. And no disrespect to musician Grover Teague, but the first part of the article just doesn't fit into this channel. So what I'm interested in is jumping into the more juicy stuff, which starts here. Next year, many gig workers will be shocked as tougher tax reporting standards go into place and greatly expand how many 1099-Ks are issued to those who make extra money in the gig economy. Now, if that is true, that's rather alarming. So keep the records. Make sure you have some sort of app where you're keeping mileage records, expense records, etc. Jot those down so you can fall back on those at a later date in case things start changing radically. While workers should report their income, experts say much taxable income falls through the cracks and goes unreported now in cases where there isn't a 1099. On-demand workers can work in entertainment, drive cars, that's us, rent property, freelance, sell goods online, rent equipment, and provide creative or professional services. What happened is that the IRS was focused on a W-2 economy and created a system that matched W-2s and 1099s and never totally focused on cash-based gig economy, such as we are moving toward now, said Richard Davidson, chair of the Taxation and Business Law Department at Walsh College. So they are playing catch-up, trying to figure out how to raise compliance. Matching payments from payers is their best strategy. So they probably have noticed at some point, hey, there's just been too much focus on W-2s. Hey, we could be collecting way more from 1099s. Let's adjust. Let's reprogram. Let's come out with a new system. So that's where I think the market is heading after reading a couple of articles. The tax change was buried inside the American Rescue Act, which was signed into law by President Joe Biden on March the 11th. What kind of paperwork did you see? In general, many people may be familiar with the Form 1099 miscellaneous that can involve payments of at least $600. Mark Luscombe, principal analyst for Walters Kluwer Tax and Accounting, said the 1099 MISC miscellaneous is still used for things like rents, royalties, prizes and awards, medical and health payments, and payments to attorneys. Fantasy sports players, for example, can receive a Form 1099 miscellaneous when they win money. But those who work in the sharing economy are often seeing a new tax form known as the Form 1099 NEC. That form is used to report non-employee compensation for the 2020 tax year and beyond. The form was designed to streamline income reporting and applies to non-employee compensation of $600 or more. Uber, for example, is issuing a 1099 NEC to its drivers who meet the income standard instead of the 1099 MISC that was issued in the past. So in case this is extremely foreign to you and it makes no sense, I would definitely look into the 1099 NEC, or maybe even reach out to an accountant friend and say, hey, what is the difference between the NEC and the MISC? right? Even if you did not receive a 1099 NEC because you earned less than $600, you're still required to report your earnings. What is a 1099K? Under the current federal income tax rules, if a person is paid electronically by credit card, debit card, or third party such as PayPal, those payment networks would be required to issue a 1099K when the taxpayer is paid at least $20,000 or more and has more than 200 such transactions, right? So, for example, let's say you are a private driver, right? And you have clients each day paying through Venmo or PayPal. If that hits $20,000, guess what? Your 1099K comes into effect. But that threshold will go away in 2022 when gig workers will see a huge shift. If you make at least, here's the change, at least $600, that's going to trigger a 1099K in the future. So that could be a huge, huge, huge difference from the past, where people were focusing on 200 transactions and $20,000 before they filed a 1099K. Now it's $600 or more, right? As those working in the sharing economy receive more 1099s, they'll be stuck reporting more of the income. The change will be felt by many, including those who pick up extra money by working for app-based companies and those who sell items online at spots like Etsy and eBay, if that applies to you. According to the IRS Tax Group Studies, it's estimated that 63% of income is misreported when third parties do not provide information to the IRS, such as with a 1099K, according to a 2019 report on the gig economy by the Treasury Inspector General for Tax Administration. Why some preach about taxes now? Davidson at Walsh College frequently brings up the tax-related challenges facing those who work in the gig economy. To his students, many students enthusiastically offer ideas for making money in a gig economy, such as painting custom pet portraits or teaching private violin lessons. But Davidson said they often don't have a clue about record keeping and usually aren't thinking through the tax implications. It's become a bit of a passion topic for Davidson, who had a 28-year career as in-house corporate tax counsel for Chrysler. The goal is to get them thinking about the fact that we're moving away from a W-2 economy. Everything is multi-gigging. That's absolutely correct. Davidson said he'd like to see more education that focuses on the tax implications and record-keeping issues, given that the gig economy is expected to grow. Now, seeing that I came across this topic and seeing that things are possibly going to change, obviously I'm going to be watching with an eager eye, and we'll follow up if there are any big announcements. The U.S. Bureau of Labor Statistics does not have a definition of the gig economy or gig workers, which can be quite broad, but has looked at various possible categories. Davidson also said they're getting into real big trouble because they don't know what they don't know. Interesting. So here's the thing. In the past, it's pretty easy, right? Most of you were clocking major miles, and then you had a mileage deduction, right? And you had a couple of extra expenses, and if everything worked out, you're pretty much scratch. You weren't paying in, you weren't receiving money back, or you were paying in very little. Note that with these miscellaneous forms and 1099K forms, things will change pretty drastically. Many gig workers could fall into a group of about 5.9 million contingent workers, those who did not expect their jobs to last, according to 2017 from the U.S. Bureau of Labor Statistics. That was 3.8% of those employed. Now, another thing, because administration after administration haven't been seeing any taxes, really, because of this vague, employer, independent contractor battle out there. What are they really? They've been losing a ton of money. Now, they didn't succeed, for example, in California, turning these individuals into workers or employees, so they couldn't really collect there. Now the IRS is saying, hey, hang on, you know what? You're not going to get away with this. You have to pay. So these changes are coming, folks. Just get ready and set money aside. The data also identified 10.6 million independent contractors, which is apparently us, or 6.9% of total employment. The group could also include what's called electronically mediated employment, or short jobs or tasks that workers find through mobile apps that both connect them with customers and arrange payments for the task. Now, if you're on an app like TaskRabbit, right, TaskRabbit, going out there, not many of these people are going to be paying you with a credit card, or there's not going to be really much tracking there. Mostly cash, just cash transactions. I don't know how you report those those cash transactions, but doing tasks, doing little jobs for cash, you know what? I'll do it for $80 cash. I'll do it for $100 cash. Are those really trackable? Because they're not electronically mediated, right? The bottom line is the job might be put out there electronically, but do they know who took the job? Do they know if that individual who took the job received cash? Hard to track for the IRS. Why estimated tax payments may be needed. If you are an employee and getting a regular W-2, your employer is withholding Social Security and income taxes from your paycheck, right? That, of course, is the best case scenario for the IRS. But hang on, there's these millions of independent workers. They're not paying in all their taxes. We need to chase after them. But Davidson notes that independent contractors must be responsible for paying both the employer and employee share of Social Security taxes and paying income taxes in a timely fashion over the year. You need to make quarterly estimated taxes on Form 1040-ES. The tax system is structured as basically a pay-as-you-go system. Guess what? The IRS wants their money on a timely basis, Davidson said. If you didn't pay enough tax throughout the year, either through withholding or by making estimated tax payments, the IRS notes that you risk facing penalty for underpayment of estimated tax. Interest is charged on tax underpayments as well. You can't afford to be educated 15 months later, Davidson said. Antonio Brown, a CPA in Flint, said he works as a musician too and gets paid as a 1099 NEC employee, so no taxes are taken out. The biggest mistake that people in the gig economy make is not withholding or paying quarterly estimated taxes on the money they make. And I'm guessing that's 80% of you out there. They overlook the reality that income is subject to self-employment taxes in addition to federal, state, and sometimes local income taxes depending on the individual's place of residence. The self-employment rate is 15.3% on the profits earned, he said. On top of that, you're responsible for the federal individual income tax rate. If you are a Michigan resident, you're paying 4.25%. Well, some people may realize they're going to owe federal income taxes on their income. They don't necessarily plan on self-employment taxes, and they're not thinking about making quarterly estimated payments. Self-employment, for example, if you have your own limousine company set up. You might be working with Uber and getting the tax documentation from them, and then let's say you have an LLC on top of it, private trips. So you've got to report all of that stuff, right? What can be done in the last quarter of the year is what is known as catch-up payments. The federal quarterly estimate for the current tax year are due April 15th, June 15th, September 15th, and January the 15th, 2022. The last quarter of the year is always a good time to evaluate what has happened so far, Brown said, and see what can be done to reduce tax liability. It becomes important during tax time because the eligible expenses are applied against the income earned, which reduces the tax liability. Too often, people who are new as self-employed drivers or other jobs in the sharing economy do not maintain good records of expenses. By the way, the link is going to be beneath this video as well, if you don't want to watch all the way. Even something as simple as tracking business mileage, which really applies to us, which can be significant expense, can unfortunately be ignored by someone who isn't savvy about taxes. You'd also want to track any fees paid to the app or website operator involved in the business? What if you don't have the money? What's worse, Davidson said, is many people may not be prepared for a big tax bill. Some people may panic and not file, which is the worst possible result. The statute of limitations never expires on an unfiled return, he noted, and the non-filer could be scared to file in the future because they fear getting into trouble for the initial year when they didn't file. You also cannot ignore the 1099-K forms that show up during the tax season that report some of your income. If the IRS sees it, you better have it. The Internal Revenue Service even has a gig economy tax center to spell out tax obligations. By the way, you can click on that. The site defines the gig economy as activity where people earn income providing on-demand work, services, or goods. Often, it's through a digital platform like an app or website, Uber, Lyft, Instacart, Grubhub, DoorDash. Gig economy income is taxable, and the IRS notes online that you must report income earned from the gig economy on a tax return, even if the income is from part-time, temporary, or side work, not reported on an information return form like a form 1099-K, 1099 miscellaneous W-2 or other income statement, paid in any form including cash, property, goods, or virtual currency. Making money can be relatively simple for many, but the buck doesn't stop there. You've got to figure out the extra steps to cover the tax bill too. So I'm not a tax expert, so don't take my tax advice word by word, right? Sort of read between the lines, go and do your own research. I've put this out there. Changes are coming. Be prepared. Maybe set the money aside, right? But the way I see it is that the IRS is waking up. They're losing on a ton of money. They are not getting it after, Uber and Lyft and companies are getting away with declaring these individuals as employers. No, they are keeping them as independent contractors. The moment they're independent contractors, the state says, how do we go after them? So they're going to get very creative, especially with that 1099 miscellaneous, especially with the 1099 documents where you do $600 or more. They will start frickin' knocking on your door, sadly. So check it out, read it again, read it a second time, a third time if you need to, and then also make sure, please, that you go out and do your own research and that you're well prepared. Have a good one, my friends. Be safe out there and get ready for those damn taxes. Cheers.